Welcome back to the Mountain Morning Show, and I'm joined by Travis McGhee from FuturesANIMal, and I think he's here just at the right time because I didn't check the numbers this morning, but over the last few days, the S&P 500 hitting some record numbers. The market's kind of crazy right now. It's exciting, and I'm sure that a lot of people are thinking, "Oh man, I missed the boat. I waited too long. Things are going the other way now. What do I do? Woe is me. I can't get in."
Yeah.
Not the case.
No, well, yeah, that's certainly been a very popular question lately. We as a firm have fielded a lot of phone calls, a lot of emails asking, that exact question. And it's hard not to think that. Certainly looking at the news yesterday.
See people making money.
The Dow didn't close. It traded briefly above 16,000, and the S&P traded above 1,800. What does that mean? Well, it doesn't really mean anything. It's just big round numbers that people like to show because it's easy to comprehend. That we've gone through, and we've never gone through those numbers before. So it's almost like it's a psychological level, that traders look at, that investors look at, that the general community looks at and says, "Wow, we're at all-time highs. Things are great. The market's going well." And then you have those who are like, "Man, did I miss the boat? Can I still make money in this market, or do I have to wait for it to come back?" So you've got that game going on right now among individual investors. My answer is a resounding no. You have not missed the boat, and the reason I say that, if you are let's say a day trader, and what I mean by a day trader is you are trading the market actively every single day. You're buying, let's say, an individual stock, and you're holding it for, maybe a day or two, and then you're selling it, just taking small profits. There's a chance you've probably missed the boat in the equity market in some cases. Now, there might be some opportunities here and there, but there's a chance you might have missed the boat. Most of us are not day traders, though. We're long-term investors, and we're trying to build a financial portfolio and wealth over a longer period of time. And for those people, again, it's where people tend to get themselves into trouble is when they try to time a market. Yeah. And pick bottoms and pick tops. There's always going to be pullbacks. There's always going to be run-ups in the market, but you have to look at it over the long-term picture. And you have to get involved at some point, because if you don't get involved now and you say, I'm going to wait until next month and I'm going to see where the market's, that tends to snowball, and then it's the next month. And there is always big events around the market where you are going to find some sort of a reason, some sort of an excuse not to begin investing. Right, or to get out. Or to get out of the market. Right.
The thing that I think is interesting as we discuss this is that I guess we sort of tend to forget that life is full of adventure. It's going to change. As you said, every day something is going to happen. There's going to be new news. There's built-in parts of the market that happen every day. We get numbers for employment. We get numbers for revenues. We get numbers for GDP. All these things are changing every day. So we already know that the market is going to be shifting every day. And I suppose that we shouldn't, if we're waiting for the ideal set of numbers, they're clearly never going to happen.
Right. There's not an ideal time. There's not an ideal set of numbers. An ideal time was 2009, 2010, where
that's looking
you look back at
2009,
2010, and at that time, had you asked someone, "Is this the ideal time?" people were saying, no way, I'm not touching the market. The market's going to zero. I'm not getting. So there is no perfect time to get involved. So looking at the market right now, I mean, okay, yes, we've hit some record highs in the S&P, we've hit some record highs in the Dow Jones. Is the market as cheap as it was 5 months ago, a year ago? No, it wasn't. It's not as cheap, relatively speaking, as it was then. Is it absolutely 100% overvalued? There's probably folks out there that say it is. I personally don't believe that it is. I mean, and not to get too wonky, but if you're looking at valuations of the market, and that's how professionals look at the market, is they take a valuation of all the companies involved and look at it to historical averages. I mean, looking into the future, our price to earnings is right where it should be. So I don't think there's a bubble necessarily in the market. There's certainly not a bubble in commodities. There's not a bubble by any means in gold.
Right.
I just, generally when you have a lot of people and there's a lot of hype, and certainly the media is saying, oh, the market's overvalued, it's overvalued.
Right.
When you have a lot of people saying it's overvalued, it's probably not overvalued.
Well, that's the thing that's kind of funny about this. When we talk about these circumstances as you just described them, typically the people that we're asking the questions to are the people who are essentially setting the market up for one of those two things to happen.
Right.
It's kind of funny that we, when they look back on it, as you said, these are the same people who said, oh, no, this is a bad time, but they were the ones who were the ones involved in it to begin with. It's a self-fulfilling prophecy to some extent.
Yeah.
So if we, as a whole, if everybody got involved right now, market, if lots of people started getting involved, market gets pretty hot, right?
Right.
So,
yeah. So a lot of what's driven the market over the past 5 years has been institutional investors. It's the larger funds. It's big money. And
yeah, because it can cause a swing on its own.
True. Granted, a majority of what institutional investors do is on behalf of retail investors. It's people who are putting money into a 401k.
That's my point.
So there are retail investors, but as far as individual investors getting involved in the market, it hasn't really been until recently that people are starting to kind of tip their toes back in and get comfortable. People are still gun shy.
But that's what we remember during the best years that was making the market hot, as the individual investors were involved.
Yeah.
So it's sort of, as I said, I think it's sort of a self-fulfilling prophecy. If we all want to step back in a little bit, things are going to continue to go the right direction.
We're in a lot. People have to realize, we're in a lot better position than we were, 5 years ago. And certainly, what happened 5 years ago has terrified everyone. It's terrified professional investors, individual investors. But we are in a much better position now than we were then. Certainly, from a financial standpoint, with U.S. corporations, they have better balance sheets. They have more cash on hand. We're starting to see Europe pull out of the doldrums that they were experiencing. We're starting to see economic activity pick up in China, so on and so forth. So things are getting better. But again, you have to pick a time and just get involved in the market. That's not to say pick individual stocks, but develop the plan that we've talked about for the past 12 weeks. Develop a plan, stick to the plan, don't diverge from that plan. What I tend to see and what scares me is a lot of clients coming in, especially those in their 30s and some in their early 40s, who are looking at their 401k or an IRA that they have with us, and they're saying, oh, I'm freaking out, I want to pull all of my money out of it, and I'm just going to go to cash because we're overvalued.
I'm one of those people, and I've been doing that. I've been socking it away.
Yeah.
I'm putting a little bit away, and it's not going in a bank even. I'm afraid to even put it there.
You have to look at things. You have to look at things over the long term, on a historical basis, and your capital. Capital tends to grow over time. You're going to have up times. You're going to have down times. But in the end, you're hoping everything smooths out and you continue on a steady pace upward over time.
Would it not be fair to say that we've been fortunate? I think. I mean, as bad as I don't want to diminish people's losses. I know that there are people who were completely ruined by the market.
Right.
But as we look at it compared to, say, if we go back to the Great Depression, things, at least as far as stability and as far as controlling the market and keeping it from just, absolutely tanking and having everybody lose everything, we've at least managed to keep that from happening last time around. And I think that we're even safer now.
We're in a much, it goes back to what I was saying, we're in a much better place than we were 5 years ago, certainly 10 years ago.
Lots of stop gaps, lots of things to protect us.
A crisis like we saw, you take the Great Depression, you take the one we just saw in 2008, 2009, you take a lot of lessons from that, and U.S. corporations learned a lot from that. They have much stronger balance sheets. We're putting a lot more regulatory
gap requirements, much stronger
parameters out there. So certainly we are in a stronger financial position than we were then. Again, it all boils down to what I'm trying to say, and what I think is important for investors to know is don't get caught up in the hype. Don't try and time markets. Picking bottoms, picking tops. People on Wall Street are horrible at timing markets, So, I mean, the retail investor is equally probably going to be as
worse,
horrible.
I would think.
You
Yeah,
know?
right.
It's hard for anyone. If someone can tell you that they can accurately time the market, they're just flat out lying.
You should walk away.
You know,
yeah.
they're not. It's very difficult. So the key is, as we've always said, develop a plan, stick to that plan, and just gradually get involved in the market and let that plan ride out. Don't try to constantly adjust your 401k. Don't try to constantly adjust your IRA. You know, just make sure you have a solid plan. Continue contributing to that plan and watch it grow over time.
All right, the man to help you make the plan, Travis McGhee,
Yep.
Futures Animal, and the website is?
It's FuturesANIMal.com. Number's right there. You give us a call and we can certainly help you out.
That's the ideal, is to figure out your individual plan, and
Exactly.
that's what this is really all about. And then, you know, look at that plan continually, and that's the part that you guys do.
Exactly.
All right.
Thanks, Joe.
Jane Patton's coming up here in just a moment with the Peace House. You don't want to miss that. It'll be right after these commercial messages. We'll be right back.